person, I mean, a billionaire wants one iPhone and one Tesla, but they would buy 100 million of your security. I had a meeting a few weeks ago. It was 20 minutes. And at the end of the 20 minutes, the person I met with bought 500 million of the thing, you see. And so you're not going to sell $500 million of iPhones in a 20-minute meeting. And you're not going to sell $500 million of houses or $500 million of cars or $500 million of satellite uplink or $500 million of Google advertising. If I start a fire and you put the fire in a stove and you cooked food, it wasn't a loophole in the laws of thermodynamics. There's energy in the fire. If I take a 40-ton weight and I put it in your backyard, it's sculpture. But if I spin it at 60 RPM as a turbine, it's not a loophole that you're spinning 40 tons at 60 RPM. It's a turbine.
So you engineered it. I mean, it's a well-engineered,
dam, right? Think about a dam. You got a trillion gallons of water sitting in a mountain lake, and you build a dam and you put a turbine in it, and then you have a 60-foot head. You drop the water 60 feet, and you put 1 billion gallons through the turbine. It's not a loophole. There is potential energy that converts to kinetic energy that becomes electrical energy that lights up the city. So with Bitcoin, you have energy in the volatility. You have energy in the performance. A 60 ARR, 60 vol asset has an enormous amount of energy. It's like a train moving 60 miles an hour with a 40-ton weight that's spinning at 60 RPM on the back, and some normie in the US dollar world is in flatland, and he's on foot, standing on a flat earth, and he's got a 40-ton rock behind him, and he's like, well, my 40-ton rock doesn't do that. And I'm like, well, that's because I'm on a train, and mine is a flywheel, and it's spinning 60 RPM. And so if you can't imagine or understand it, then you think, well, we both have 40-ton weights, right? But mine's moving and mine's spinning and yours is sitting. So no, it's not a loophole, it's physics. And in this case, it's financial physics. It's just to be charitable to the people that are staring at it. They've never seen an asset like Bitcoin that is 60 vol and 60 ARR, 60 velocity through US dollar space. And because they've never seen it, they think it'll stop. It's like, if a white dwarf, spins through your atmosphere and it sucks all the atmosphere off of your planet, you're like, well, I never seen that before. It shouldn't be doing that. And it's a loophole. It's not. It's basically physics. You just don't understand the physics because maybe you just haven't spent enough time to study it, or you don't have the intellectual capability or the math to describe it.
Why you guys have started to raise so much and started to be so aggressive now as the prices have been going up?
Well, I think we've been progressively getting more aggressive quarter by quarter since August of 2020. And we got more aggressive in the first quarter of this year. We did 2 convertible bond offerings in 2 consecutive weeks. That was the first time anybody in history of the capital markets ever did that. And then we did another one in second quarter, and then we did $1 billion offering in the third quarter, and then we did a $1 billion equity offering in the third quarter. And so we could see the capital markets were very enthusiastic. I think the capital markets, their view of Bitcoin improved from January of 2024 to today, right? The ETFs came out second week of January. It took a while. By the middle of the summer, they were the most successful ETFs. By the third quarter, people realized that Bitcoin was a real thing. And then, of course, you saw a political rotation when the Trump campaign embraced crypto and embraced Bitcoin. That put a huge tailwind behind things. But what happened in November is we decided to accelerate. So we announced a $21 billion equity program, a shelf registration, and a $21 billion fixed income program. And we did that October 30th. Okay. And no one had ever done that in the history of the world. So that was the largest ATM registration ever in the history of the capital markets. So we, of course, no one ever created a digital commodity before that was 60-60 vol. And so you had a new thing you had a new political regime, you had a new corporate strategy. Then we had to wait and see how the capital markets would accept it. And so the following week, all of our shareholders got behind it. You know, the day after we announced that, our stock out-traded all the big tech companies, and it out-traded all the Bitcoin companies, and it out-traded Bitcoin. I mean, it was to the upside. So the question is, do the capital markets want to get behind MicroStrategy, you know, as the major treasury company in the space? And the answer was yes. But then the next question, November 5th, is, are we going to have a blue wave, a red wave, or a red, white, and blue, you know, thing? And we got a red sweep. So at that point, Bitcoin's a winner. MicroStrategy strategy's got an endorsement. And then you've got a pro-crypto, pro-Bitcoin White House, Senate, and House of Representatives. The market surged. And in those 4 weeks, we raised $13.5 billion of capital. And we only raised $10 billion in the previous 4 years. But you got to keep in mind, you know, this is an exponential process. You know, if I'm selling you an iPhone and you're a rich person, I might be able to get you to buy one for $1,500 and replace your $200 or $100 Nokia phone, right? And if I'm selling you a Tesla, I might sell you one. But if I'm selling you a security that's twice as good as everything else in your portfolio, how many do you want? I mean, the answer is, if you're a rich person, I mean, a billionaire wants one iPhone and one Tesla, but they would buy 100 million of your security. I had I had a meeting a few weeks ago. It was 20 minutes. And at the end of the 20 minutes, the person I met with bought 500 million of the thing, you see. And so you're not going to sell $500 million of iPhones in a 20-minute meeting, and you're not going to sell $500 million of houses, or $500 million of cars, or $500 million of satellite uplink, or $500 million of Google advertising, even though those are all good products. But we're talking about digital money, right? We're talking about digital capital. And so how much does the government want? How much does a company want? How much does a wealthy person want? Well, they pretty much want up to their risk tolerance. And so another way to say it is, everybody's risk tolerance is changing, right? If Jerome Powell says Bitcoin doesn't compete with the dollar, it competes with gold, that's a massive risk that's been taken off the table. You know, if Donald Trump says never sell your Bitcoin, that's a massive risk. If you have a bill for the U.S. to buy Bitcoin in the Senate, that's a massive risk taken off the table. So what you've had in 2020, if BlackRock says, yeah, we think this is a global monetary alternative for people concerned about debasement of currencies, you can see all of those things are happening between January 1st of 2024 and the end of November. And so what I say is, it's either something or it's nothing. It's either going to zero or it's going to 1 million. If it's not going to zero, it's going to 1 million. There's a massive battle between the bulls and the bears. The skeptics, the haters, they think it's tulip bulbs. They think it's nothing. They don't understand it. Therefore, it must be worth zero. And the bulls say it's the future world reserve capital network. And everybody with any amount of money in Africa, Russia, China, South America, Europe would prefer to own Bitcoin than a building or a natural gas field or a bunch of bonds or a company. And so as we win that narrative, and as you have expressions of confidence and acknowledgement and respect for the asset class, you're going to see massive pools of capital surge into Bitcoin. The price is going to move up, and a lot of people will buy Bitcoin. But can you see why? Like, so $100 billion of money is in Bitcoin spot ETFs. They get 100% of the upside and 100% of the downside. Can you see why someone might like the idea of 100% of the upside and none of the downside?
Sure. I mean,
it's not a complicated idea.
It's a no-brainer.
You can't create 100% of the upside and 10% of the downside without a pool of permanent capital that is a buffer or over collateral. So so the ETFs don't have collateral. The ETFs don't have permanent capital. MicroStrategy, for example, can take our $40 billion of Bitcoin, and I can sell you the senior $4 billion tranche as a security, and I can say, you're going to be 10x over collateralized. So if Bitcoin trades down by a factor of 90%, you're still getting paid back. And that's a very compelling proposition for someone that's risk adverse, that's Bitcoin curious. And so all of those investors are coming to the market right now, and Bitcoin serves some of them. The spot ETF serve some of them. Companies like MicroStrategy serve others that are either very risk averse or they want leverage and performance.
And do you encourage other people to copy the model? Do you think that there are others that can copy the model, or do you think that it can't be copied because most people don't have an operating business? Like, I'm trying to understand. You're very open about your playbook, and you know, is it part of your strategy to get as many people to do what you're doing as possible, or do you believe that people won't be able to replicate the business?
I think every company in the world should recapitalize on Bitcoin. So like that's 400 million companies. So I think all 400 million should. I think every family, every individual should. I think every government should. I think Microsoft should recapitalize on Bitcoin. I think your bakery should. I think all the Bitcoin miners should. So yeah, everybody should recapitalize on it, right? You're talking about capitalizing on an asset that's 60% ARR, 60 vol, instead of an asset, the US dollar, that's 0 ARR, 0 vol. Another way to say it is, I think we ought to put an internal combustion engine in every horseless carriage. I think we ought to put a gasoline powered engine in every house, every plane, well, every train, every automobile, every factory, right? I mean, I want to put a fire in every vehicle on the planet. That's what Henry Ford did. That's what John D. Rockefeller did. They put a fire in everything. And I think you could think about this as a crypto reactor fueled by Bitcoin. Bitcoin's the fuel. It's crypto reactor. We should put one in everything. Let's think about the generic idea. The generic idea is you have assets. If they're going up 0% a year and the cost of capital is 15% a year, you're losing, it's minus 15% a year. Your capital is being destroyed. So that's the US dollar treasury strategy. The Bitcoin strategy is plus 45% versus the cost of capital. So everybody can do that. Meta, Apple, Microsoft, Disney, everybody can do that. Every Bitcoin miner. Microsoft right now has a market cap that is 95 to 97% valued on forward expectations.
Correct.
And its multiple to NAV is 20. People talk about multiple to NAV, right? Well, multiple to NAV of Microsoft is 20. And that means that for every $20 in market cap, they have $1 in some tangible asset. And so the other $19 are based upon like 144x multiple of quarterly earnings. And so if they were to ever announce that they think their quarterly earnings will be down by 30%, you've got like $1 trillion of market cap that evaporates overnight. So most companies, they don't have any assets. Most operating companies don't. What they have is forward expectations. And that's why you see these stocks crash all the time when the company has an earnings call and they say, we've taken down guidance. If the CFO says, well, I think the guidance will be like, 6% instead of 9%, your $2 trillion company becomes worth $1 trillion in 1 minute. Now, how does that work with institutions and foundations and wealthy people? For example, how much of Jeff Bezos' wealth or Bernard Arnault's wealth or Elon Musk's wealth is based on forward expectations? And the answer is none of it. Actually, their wealth is based on the actual assets they own that are marked to market. Like if you go to Harvard University, Harvard might have a $20 billion endowment. And you're like, well, the endowment's worth $20 billion. Well, how much of it is the forward expectations of the profit from the university? None of it.
None of it.
See, none of it. So the wealthy in the world, they're valued based upon assets they own I know a lot of billionaires. They're like, well, we don't really want to own operating businesses. We want to own property business. Like I give you a choice. You can have a business that makes 100 million a year, valued at 100 times expectations, or you can have $10 billion worth of actual property outright.